Okay, there we go. Yeah, so the next thing I'll go and look at a little bit tighter time frame, and then my eyes immediately jump to about the 400 level. So again, that's where that liquidity pocket would be. So at this point, the first target, I'll be looking at the 400 level if we were to continue on beyond the 39. And then I would respond to this basically at the 400 level based on the liquidity that we've seen already. So they obviously like to transact there, but this would be what Corey, this is what like TradyTix, for example, would consider a ghost zone beyond the 400 level, because there's not going to be much, there's not a lot of BFI transactions taking place there, and that's why you see that volume, drop off significantly there. So immediately, so I'm just going to be looking at the 400 level right away. Now this is a liquidity examination, but you also have to put a little bit of psychology into this, right? And also an understanding of the market mechanics, okay? Now we know that the point of control is up here at 411, right? 411.63. I'm just going to put a rough line up there. So we know the point of control is up here, okay? That's where the BFI likes to transact the most over the last 6 months. That's where the most orders have been transacted, okay? And you can see how the price has responded around that point of control where it's oscillated back and forth, and then a break beyond the point of control has shoved it higher, and then a break beneath it has obviously pushed it lower. So but you can see where that price paused for significant amounts of time along that point of control. Like look at this right here, for example. Like look at how this price went back and forth many times along that point of control. There's a lot of longs that were trapped here. They were able to take, a lot of them were able to take their exit up here at these higher prices. But anyways, so I would just be looking at these price levels here, right? So I already know that these are, potential points of interest in terms of where the BFI likes to transact, right? And then I draw a little bit tighter zone. Let me make these a little skinnier so they're not so fat. So I draw a little bit tighter zone based on our own trading principles, right? So I may do something like that. Draw a zone from base to wick here. Make this zone a little bit more valid by going like this right there. So I'd be looking at roughly in that range to see some pushback if we do end up trading beyond this 3,900 level and actually holding. Which, by the way, I saw the futures are currently down at the moment. Current price is I think it's 388. Got a little bit of a pullback. Current price is 388.66 on SPY. 388.66 on SPY right now. But yeah, so like that's how I would look at this. So I'd look for the push beyond the 3,900 level. And then keeping the market mechanics, and that's where I was going, keeping the market mechanics in mind, right? We know, just like I mentioned to you guys at the 3,800 level, push beyond, that's gonna squeeze some shorts. Same thing at the 3,900 level. There's a large short position that's there. So these shorts start getting squeezed, they're gonna start covering. That's gonna push that price. It's gonna exaggerate the move of what would be organic, right? In normal market conditions, there wouldn't be as much short interest present, but because there is that significant amount of short interest, you could anticipate this price to actually push a little bit beyond and slightly overextend. In fact, kind of like it did up here. In fact, like this to me was an overextension. I was actually surprised to see it push beyond that 420 level. But the same thing happened over here, for example, right? The same thing happened at this 362 push. So I was looking when we were on this bear rally, I was expecting price to tap out here, but you see it pushed actually what, it pushed like an extra like $7. Eight was four, yeah, four, yeah. So pushed like an extra like $6-7 to the upside beyond that because there were those shorts that were present that are covering, so a little bit overextension there, and then you can see how that price responded a couple times to that supply line before trading lower, before having 7 weeks of downside. But yeah, same thing that happened here. You could anticipate potentially the same thing to occur again, where it would actually be an overextension. So it may even end up moving beyond what I think may be a target, because those shorts are going to start covering, they're going to start squeezing, etc., and people are going to be closing puts. It's going to, it just starts this whole domino effect of shorts closing and puts getting closed, shorts covering, puts getting closed, and call buying, and euphoria, and it just keeps going until eventually the buyers exhaust and that price starts to move sideways, and then you get the U-turn. So you could actually end up seeing this move beyond what I think is a valid target, and may even come back to this point of control where you might see the price respond like this again, where it starts moving sideways, and the BFI, they start distributing their range in a tight range. They start distributing their position. So obviously, you guys at this point, you guys have been trading with me long enough that you guys all know, I mean, at least to some degree, like, you guys have a very good understanding of what distribution looks like, what accumulation looks like, what bullish order flow looks like. You guys know the signs, consecutive pairs, dojis, hammers, wicks, big wick off, big wicks with high volume at the top of a chart, deep wicks with high volume at the bottom of a chart, typically signaling reversals when they print hammers like that. You're seeing multiple dojis moving sideways at a very specific price point. You can expect a potential U-turn, a large move to occur as that exchange takes place, and then you see that violent move take place from there. So we will respond as we normally do. We'll respond to what we see, but this would at least give us some just some reference, and we'll use our tools like we always do to read that price action. Would you take a multi-day? So it seems that 390-400 is a good range. Yeah, I do. I do think that 390-400 is a good range. If there was some dovish energy, right? If there was some dovish energy that somehow miraculously came in on this FOMC meeting, right? Because this is a binary event. So if there was some, if the Fed came in with, I don't think they are, by the way. I doubt it. I think that would be reckless for them to do that. But if for some reason that they did that, then yeah, 390-400 would be more than valid. I think it would probably go to 420, 430, maybe even more, honestly, because that euphoria, and maybe you start getting some of that long-term capital getting deployed. That would be, that would be valid. So I don't see why it wouldn't. But I doubt that that's going to happen. So, and leading up to the event, as it has been with every single FOMC event this entire year, every single FOMC event, I can just look at the chart. I know where they're all at. Every single one. Here's one here, here's another one right here, here's another one, where is it, right here, this one, here's another one, here's another one right here. I know where they're all at just by memory. There's another one right here, there's another one right here. Pretty much every single one this year has had this momentum leading up to it in anticipation of a potential pivot. So I don't expect anything, I expect the same thing to occur with this one, as we've already seen, a little bit of silly behavior returning to the market leading up to this event, despite the CPI numbers, despite the core PCE, despite the PPI, despite all the other things that should potentially be bearish. There's just still this front running that's taking place for the FOMC leading up to it, for a potential pivot, or at least a pullback. Maybe not a full pivot, but a decrease in the interest rate that they're maybe 50 BPS or something like that. Not a full pivot, but maybe they're not going to continue hiking it even higher. It's not going to 100 BPS or something of that nature. So the question is, 390 to 400 is a good range. Would you take a multi-day weekly 396? Absolutely. Yeah, I would take a 396. I think 396 is more than valid. You're going to probably see a $10 move off this FOMC event in one direction or the other. So, yeah, I mean, you most likely see a $10 move the same day. So, I mean, here's the last one. Like, here's the last one here. Like, this was we traded this one actually pretty well. We had a couple strangles running. I remember we bought this very tippy tip bottom here and took, this was an $8 move in the day, and then another 389 to 377, another $12 move to the downside. So, we had a couple strangles going, but I remember taking this zero with you guys to the upside for like a nice triple digit gain. But yeah, you probably see a $10 move in the same day, one direction or the other. And then as the week progresses, it's either, going to do this, or it's going to, rip to the moon to the upside. Like, if for some crazy reason that there was a 50 BPS came in, I don't think so. But if it did happen, I don't see why you wouldn't see a $10 move to the upside in the same day. So taking a 396 for the week, yeah, I think that's more than valid. But you can also hedge it, right? You can also hedge that same position before the FOMC, so you can anticipate more upside to occur. Maybe like we might even see like 393, 394 before the event, and then you could take like a 389 for Friday or the following Monday, something like that. Yeah, yep, exactly. Yeah, you could take something for Monday. Give yourself some time to let that play out. So, but yeah. Jerome had a question. Where are you at with your instruction manual? Lots of editing is where I'm at. I'm still working on it. Want to give you guys a full product to the making a nice little course. But I've been trying to, when I have time, I don't know if you've noticed, Jerome, that I also opened up another section in the Discord, trade plan and guidelines. So I've started to update that whenever I get a chance, just giving like key components in this of the course that I'm designing for you and everyone else. Putting it in order of what you're, basically how you want to structure at least a nice trade plan. A lot of what you're going to be learning is you're getting a lot of that from me already organically because you trade with me every single day. But of course, it will be nice to have that in a text format where you can just go through the system and say, okay, all right, this is the system, and I'm going to just implement this to my own account. But a lot of that also is available in the YouTube videos that I have. Setting that structure up. If you've gone through those videos, you've already learned a lot of what is going to be in there. But there's obviously definitely more to it than that. But yeah, I'm doing my best to try to make it clear and concise, and also not too lengthy to where it's boring. Just trying to give you the meat of everything that you need to know, and yeah, that's it. So once I have it finalized, I will put that in the group. Absolutely. Yeah, absolutely. So there's a handful of basic trades that I cover in the course. A lot of which, again, you've already learned though, right? So like, let's just like we'll just do like a quick review, right? Just like something simple. So like, let's just say like something like this. Okay, let's just use this day for example. So like, you have this hammer, and you have this, I guess you can call this a really long wick doji, right? So like you have these two consecutive prints occurring here, right? So the your eyes immediately should look at this as a pair, right? Two 15-minute candles printing as a pair. And then the question for you is, all right, the question you're asking yourself is this a rejection of this? Are these wicks rejecting, or are they reaching, right? That's always the biggest question with wicks, right? For example. So then the question for you is, all right, am I at a demand zone or am I at a supply zone? So if this is the demand zone and the BFI has a position built up, these wicks are most likely doing what? They're most likely reaching. Actually, I remember we took this trade literally from the bottom here. A couple of you were in with me on this SPX trade, and we traded this literally all the way up to 386.66 and then took our exit with a trailing stop when it U-turned. So, like this is a pair that we look for, right? Like that's or not a pair, not necessarily a common pair, but this is a pair that would give you indication. A classic pair would be more something like this, bullish pair. So like let's get a little bit tighter time frame so it's a little more clear. It's like something like this. It's like consecutive bullish candles printing on a 5-minute time frame. That's a pair. That's a classic pair. But then same thing on the flip side, right? Like if you were looking for a bearish setup, it's like this is doji, 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 doji. We talked about this actually at the beginning of today's session. When you see consecutive dojis printing at a known supply level, most likely about to make a U-turn, then not only are you getting a doji, doji, bear candle, this is a pair right here. In this combination, this is a bearish signal right here. And if you were looking at this on a 15-minute time frame, right, just using this one, right, so that's a bearish pair right there. So like that's a signal for you to take an entry, right? So like I'm using multiple examples in the course that I'm designing, but the main ones that you want to look for more than anything are these pairs, like a bearish pair like this and a bullish pair, something like this, for example. Those are the most common, and then where they print on the chart obviously is the big question mark. That's what gives you your probability, puts the probability in your favor. So, but yeah, there's a whole section dedicated to candle signals. So, because obviously it's not everything, but it's a big part of entry and exit methods, right? So dojis, hammers, pairs, those are the four main things that you have to you should constantly be scanning for all the time. So dojis, hammers, pairs, bullish, bearish, bullish engulfing, bearish engulfing, and I also go over a couple of my personal entry methods. Like you see a bullish engulfing candle printed or a bearish engulfing candle print, right, on an intraday chart, for example. Immediately I just take if I didn't take the entry before the candle printed, right, this is just one classic one. This is my favorite entry style, by the way. Actually, it's actually on this chart right now, funny enough. So I see a bullish candle, I see a bullish engulfing candle, or bearish engulfing, it doesn't matter. It works both ways. I see a bullish engulfing candle print, I immediately just take a measurement right away. I mean, I can do it like in my mind. I don't draw it out on the screen, but like I'll immediately take a measurement of the body of the candle, right? And I'll set a trailing entry at 50% retrace of the body of the candle. This is my favorite entry. So, and like you can see how that literally played out perfectly, right? So 50% mark is 381.15. We were already in on this. We were in the day before, so I didn't take this entry. I was already in, but this is like my favorite 381.15. So like if I put a horizontal line at 381.15, like that. Look where that would have put you in terms of an entry. So this is just a classic algorithmic style of entering a position. So because when there's an impulsive move like that, there will just be a response. More likely than not, there will be some response, and a valid entry would typically be about 50% of the candle body. So like I go over this entry style, and other types of entry styles of like wicks and whatnot, how I enter on wicks or how I treat them. Like wicks getting filled, for example, like this one here. When I saw this, when you guys took this 0 DTE entry with me the other day, I think Corey was actually on this trade with me. I think Evan too. A few of you guys took this trade with me. So I saw this first one print like this, and because we were at a demand zone, I said, okay, this wick is most likely gonna get filled. So when price retraced back to this base here, if you guys remember, I took that trailing entry, and then price literally just came down, touched, and filled me right away, and then it just took off like a rocket, right? So I was looking for this wick to get filled and turn into a full body, which is exactly what happened. I'll go back to this example to answer that question. So I use a trailing entry. So that's the first step. I don't use market orders, right? So the price chases. So if this price continues to, let's just say like this price were to continue to fall, right? So like to answering this question that you just asked, if this price were to continue to fall, hopefully that trailing entry wouldn't trigger, because I'd give myself enough space to give it breathing room to where if it went beyond this base here, really it's this base is where you would want to look. You want to look at the origin of the impulsive move. So the origin is here, right? So like let's just hypothetical with me, right? If I was day trading and I was running like a tight contract, a tight expiration, and I put a trailing entry here at this price level, right? Or at 381.15, let's say. And let's say this price didn't reverse right away, but maybe it reversed here and it did something like that and it filled me and then it continued to fall, right? I put my stop at the origin of the impulsive move right here, because I'm most likely wrong. If it ends up falling beyond that origin, I'm most likely on the wrong side of order flow, because that'd be a structural break. Yeah, I know. Yeah, let's say it triggered. Let's say it did something like this, like I just drew out. Yeah. Let's say it fell, it bounced, triggered, it filled you, and then it continued to fall. This is where I'd put my exit, the origin of the impulsive move, because what that would show me is that this BFI or the group of BFIs that took their entry here, right? It would show me that they don't want to protect their position anymore. So this is where my stop would be. And this is another one of those things. This is part of the course. It's just entry, exit method, stop method, how to identify, how to structure yourself, and then also on top of all of that, right? You shouldn't be taking a full size here anyways. So like even if it did move against you, so this goes back to what we were discussing in the first part of, you weren't here for this, Evan, but this goes back to what we were discussing at the first part of tonight's session. You guys know I always scale in. I scale in, right? I scale into the position. I scale in as I get confirmation, right? It's like, okay, so like if I took my first entry here, right? If I took 20% or 30% right here, let's say, right? And then, okay, then it bounced and it broke to a new high, right? Then I say, okay, it broke previous high. I can size up, right? So I can set a trailing entry to size me up, okay? And then it prints a bullish pair. Okay, I can size up again, right? Prints a bullish pair above the previous high, prints a higher low, right? And closes on a higher low. So not only did this candle engulf these previous candles, but it printed and closed beyond. So all those sell orders are filled, right? So then I can size up. So I can take first initial entry, great deal. If I didn't already take this, I should have taken this already because it's in a demand zone. I already have multiple valid signals, all right? So if I didn't take this at the open when it made the money move outside of the zone, that's another one of the things that I discussed in the course, the money move, when the price leaves the zone, right? So if I didn't take the fill when it made the money move when it left, I took the fill on the 50% retrace. Then I took the next fill when it traded above. It traded above and closed above this, right? Maybe I even was aggressive and took another fill as it was, as it was trading up. Depends on how aggressive you are, but you could even wait for the close, so you could maybe make this trailing entry here, right? Then when we got another bullish pair close, take another entry. At that point, you're probably fully sized, because the market not only has traded in your favor, we've also added size to it. And by this point, you're going to be up 30% at a minimum. You're going to be up 30% minimum, more than that. So like that would be a classic entry for me. But like, okay, for example, right, talking about money moves, I'm just going to go over to Microsoft. A lot of you guys remember I made this call on Friday right out the open. I just hit it right out the gate. There was no wait, no pause, no scaling, none of that, right? You guys remember it was like 3 minutes before the bell. I was like, yo, I'm going all in on Microsoft right out the gate. I didn't really give an explanation why at the time, but I explained it to Corey afterwards. It's because I already had this demand zone printed, I already had this demand zone drawn out, okay? And I already had these multiple signals here. So I had this, and I had this U-turn taking place. I had 4 hourly candles printing, leaving the demand zone, and it had already left. Obviously, I didn't have a chance to be involved in the money move because it was already outside of the zone when the market opened. So I just hit it right away, and then we just we caught like if you ran the 0, it was like 500%. If you ran the 11.4, if you ran the week long contract with me, it was like 200. I don't know, it was like 270% or some stupid like that. So, but this is just again another entry method of understanding. Another entry, yeah. Agreed. What I'm trying to learn is when to cut my loss, establish that it didn't do what I thought it was going to do versus a normal movement. We're dealing with probabilities after all. Yeah, of course. Right. And that's like when you take the entries, right? When you use these proper entry methods, like I've been teaching you guys for weeks, some of you months, right? When you use these, like, I'm not just like doing this like I'm not just like doing this style of entry just because I'm trying to like move slow or limit my upside, right? It's because like as a professional trader, you should be focusing on risk. Risk is always number one, right? Because like the amateur trader, they always focus on how much they can win, okay? The pro, he focuses on how much he can lose, okay? So the reason we have these methods of scaling in and waiting for confirmation and sizing, etc. The reason we do that is because like you can blow up an account a lot faster than you can grow a big one. Like you can blow up an account in one day, right? But it's really hard to grow a big account in one day, right? Like, you know what I'm saying? So the reason we do this is for this exact reason, like you're talking about here, Evan, right? Like, I love it. I love it when I'm only in 10%, right? I take like a 10% entry and it moves beyond and it breaks structure and the 10% entry draws down 35, 40%. And I'm like, okay, whatever. And I just click out of the trade. I'm like, all right, who cares? Like, I don't care about losing 40% on a 10% entry, right? Or even 50%. I don't mind losing 50% on a 10% entry. That's a 0.1 loss of a position size. I can withstand a 0.1 loss. I can withstand a 0.1 loss like 30 times in a row. That's okay. And I only need one of those trades to be right to break me even, assuming a 3-to-1 risk reward ratio, right? So I only need to be right one time. So, but like if you scale it like this, right? If you just lose 0.1 over and over again, like, who cares? Who cares? If you lose point 0.1 like 5, 6 times in a row, right? And you get one winning trade out of our risk, out of our model, right? You should be net positive massively. You should be up you should be up 2.5 positions. So, at a minimum, even if you're a paper hand, you should still get at least like 150, 200%, something like that out of the trade easily. Like, and we do this every day. But that's why we do it like that. That's why. Because it's like this. To simplify it, I'm taking this 10% as I saw a valid signal and a valid zone, and there's a probability that this could be a winning trade. So I'm going to take this 10% and I'm going to risk 50% of my 10% position to find out. And if I'm right, that's a great entry. And now that entry, it dollar cost averages my other entries and makes it a great entry for the other ones, right? Because it was such a sniper entry. Like, I had a great position to get in, So that's why we do it though, like that. Could you tell me what made you exit the Microsoft trade? I guess it would be. Okay, so there was two things going on with Microsoft. Again, I wasn't explaining this during the live session, but I'll explain it now in a little more detail. So right here, yellow line, you already know what that is for me just because you trade with me all the time. So this is point of control. So when the price ripped up, when I just hit it right out the gate, price ripped up to the point of control, and I just trailed an exit. Wait, what? Wait, you're asking two different things though. Could you tell me, what would make you exit the Microsoft trade? What would make you exit? I'm guessing it would be a break, hold, close below in the drawn zone. Oh, yeah, what if it didn't? Yeah, if it just broke the zone. Yeah, that's it. Simple as that. That's why we draw zones. Yeah. But so the reason I was so aggressive with this particular trade, this one, yeah. Okay, every trade's different, right? But the reason I was so aggressive with this one in particular, and you guys know I normally am not like that, right? That was weird for me to trade like that. I'm like, I'm in out the gate. I don't do that. You guys know I don't do that. So the reason I was so aggressive with this particular trade, this very, very specific trade, it's very, very rare that you are opening the market at a 52-week low demand zone, at a quarterly demand zone. Very, very rare that those specific variables line up like that, right? So not only was it opening up at a quarterly demand zone, right, but I already had 4 valid signals before the market even opened, right? And it's already left the demand zone. So the chances of this trade being a win is like very, very high. Very high. Okay? The chances of this trade being a win, I don't have the exact numbers in terms of probability, but like very, very high risk reward ratio. Like, I was totally okay with if I'm wrong on this trade, okay, I'm wrong. No problem. But the chances of this trade being a winner is very high, especially when the whole market is bullish. Like, even though the news is bad, they just had bad earnings, blah, 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 whatever. Doesn't matter. Our understanding of BFI method tells us that this is a very high probability trade to go long, right? Because we know they have a big position here. We know that. We know they have a big position. So, that's it, really. We know they got a big position. So, yeah. So that's why I was so aggressive with this particular trade on this particular day. So, Yeah, high probability. Yeah, if it holds up the point of control, I'm gonna buy another call. Yeah. Yep. Yeah, like if we open up on Monday, if we open up on Monday and we stay above the point of control, if we stay above this zone right here, if we print a bullish pair here, I'm gonna buy another call. Same strike. Yeah, same strike. Yeah, and I'll look to the supply lines here. I should have one more there. Oops. Yeah, yeah. If we go, I will look to the supply lines up here. And then obviously if we move beyond the supply lines, that'd be a break of structure, and I'll keep holding. Yeah, write that down. Yeah, write that down. Yeah, if we stay above this zone right here, I will buy another call. Yeah. If we break this zone and we start trading down, I will short. Simple as that. If we break this zone to the downside, I will short in anticipation going back to quarterly demand. If we print a bullish pair and maintain this point of control to the upside, I will buy another call and go long. That's simple. No thinking. No thinking. No thinking about it. Nice and simple. Or even if you were unsure, right? Even if you were unsure and you were like, I don't know what to do, or I don't know. Let me turn this thing off. Got the night mode on. Okay, there we go. Even if you were unsure, right? This is a great position right here at 234.65. At 234.65, this is a great spot to run a strangle. You could run a strangle here. This is a great time to do something like that as well. You know, and you could be bullish tilted from here. Yeah. So you could do, you don't have to know what's going to happen next. You can just say, you know what? I'm going to let the strategy do the job. Three to one red zone, more than that. Yeah, more than that, dude. You run a trade from here to here, or from here to here, it's way more than 3 to 1. We just got 260, 70% in halfway on Friday. And that was on a weekly contract. That's more than 3 to 1. We got 3 to 1 just doing this. Let alone if this contract continues, like these same 240 contracts that we bought on Friday, these will be like 600-700% from where we entered to here. Yeah, it's way more than 3 to 1. Yeah, way more. We hit 3 to 1 on Friday just going from here to here. But yeah, you get a move, you know, either way, either direction. Like you could probably run the like a 230. What are their contracts right now? You could we played the 240, but let me see. Okay, so they got $5 spread. So you could probably run a 235 contract as a strangle, you know, or I mean as a position going both directions from demand to supply. We went a little bit farther out. I made that decision on the 240 strike because of the BFI position. But for 11.4, you could run like if you're opening up where? Or the question, yeah, I got to know where we're opening up to give an idea of how I would structure it. Like if we're opening up at 235, yeah, you could go like, if let's say we open up at 235, yeah, you could go like 240, 230 as a setup. So like this, right? You could go 240, 230, like that. Getting a little messy here. Let me clear some of this up. Yeah, so you could run that as a setup, right? Because you know it's going to move more than $5 this week, one or the other. Yeah, you could do that. Yeah, you could weight it, right? I'd probably go like 2 to 1 instead of 3 to 1, just because of the FOMC. I'd want a little bit more weight. Yeah, just because if you're wrong. Yeah. Should your dotted lines be solid lines and vice versa for the demand and supply zone? I think I adjusted them when I read that question. I changed the structure. Yeah, yeah. So yeah, this dotted, this solid, dotted, and then obviously dotted for the point of control. Yeah, sorry. Yeah, you know what? We don't really trade Microsoft that often. Pretty much never, right? We just haven't in this group. I had the lines already up, just on my own chart, and I just never adjusted them because I typically don't have this chart up for you guys. So like for me, it's just like whatever, click, you know. So, but yeah, as an adjustment, yeah, you can update your if you want to have these. Let me take this off as a range as some levels here. I'll just put this in the chat for you guys so you have it. So like you can use these zones here for the week moving forward if you want to trade Microsoft. By the way, I love trading Microsoft. You know, I do obviously, you guys know I do little side quests and stuff on my own. But yeah, you can use these levels though too. I will be watching this one though again. I like to trade tickers after earnings. That's like my favorite thing to do. There's just a lot of liquidity. There's a lot of volume that typically makes big moves. I do. I do side quests. Well, here's the thing, Corey. Sometimes sometimes the ticker sometimes the specific ticker that I'm side questing on is a little pricey, and I know like roughly what most of the group is kind of working with in terms of size, so like I tend to cater the call outs, if you will, to the group so that way it can, yeah, I know you will. I tend to cater the positions, for the group so that way they're, everyone can be involved. You know what I mean? So, because I'm typically running myself like 3 to 4 positions at a time at most, right? But, like sometimes I'll maybe just have like whatever I'm doing with you guys, but I might have like something else going on that's maybe a more pricey position. Like I like to trade Tesla a lot, for example. I don't always call that one to the group unless like I have like a really high conviction on it. Like if I feel good about, or not feel good, but I have a high conviction for what's coming up, because the contracts are so expensive. Even after the split, they're still, $400 or $500, $600 for anything that you actually want. So, anyways, yeah, but yeah, guys, hit me with if you want to hit me with some other questions. Go for it. This has actually been a good. Oh yeah, I skipped that. My bad. Yeah, I saw you mention that. We've talked about. You like this ticker. You're waiting on it. It still hasn't done the thing, man. Yeah, I still haven't got the alarm yet. Yeah, it still hasn't done the thing. Yeah, when it hits the level, I'll be interested. Until then, I'm not. When it hits my alarm, I'll play ball with you. Until then, choppy. Yeah, there's a thing, but it hasn't done the thing though. It hasn't done the thing yet. Yeah, I mean it's on a upward trend still, right? We talked about this at the beginning of the month, I think, somewhere over here, something like that. Yeah, yeah, we because I remember putting this zone up for you. I saw this BFI entry, and I'm like, all right, this is the zone, but it's got to have a breakout to be valid. So yeah, I'm not a player yet. I'm still not a player. Until it does the thing I want, I'm not interested. Yeah, it hasn't done the thing yet, man. I mean, it broke, but I still got one more line here. Yeah, nah. If it hits this alarm, I'll consider it. You know that. That's why it's there. But it hasn't hit yet, so it's got to break, hold, and close above this level here. Until it does, I'm not. This is just to get my attention, by the way. This is not even a position. I'm 163.3. This is not a position. This is to get my attention to come look at it. I need this here. I need this break, hold, close above. Yeah, okay, so 163.3, my bad. Yeah, so that's the spot where I'm interested. I should actually bump that down just a tick. Get my attention a little bit earlier. Yeah. Yeah, break, hold, close 163.3. You want the gap fill. It's a good company. It's not going anywhere. BFI is building a position, though. I promise you that. You know, if you buy time on it, though, you'll probably be fine. Yeah, if you buy time on it, you're probably good. Hi, boys. You're okay. Stop crying. You're fine. I see you're feeling better. Hey, boy. Go lay down. Go lay down. Go. Bed. Bed. Go lay down. Go bed. Go. Go lay down. Go lay down. Go. Go to bed. Go. Go. Off. 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 Go. Go. Bed. Bed. Crazy. Yeah, no, I know. I mean, it. Look, it's a play. It's just, here's the thing with this ticker though, Evan. It's a low beta ticker. First of all, it's a low beta ticker, low medium. The spreads are not that great on it. Okay, the spreads are not that great, but the Greeks are highly favorable. They're okay. They're a little bit loose. I mean, you see what I'm saying? Like there's some, you know, there's some spread there, you know, and that's because it's low liquidity. But I've traded this stock many times. But the cool thing is when it does make a move, these contracts go berserk. They go nuts. So that's the thing with this ticker. It's not one to day trade. It's one you kind of want to sit in it. Yeah. If you're okay with sitting in it, it's cool. Yeah, it's fine. As long as you've got the patience to sit in it, it's fine. But I've traded FedEx many times actually. It's funny actually. The last time I traded FedEx was here. Where is it? You can see I still got zones up here. I traded it a few times. out of these zones, but where is that? There it is, right here. I uh, I took this short coming into the earnings and I held it through actually, and I just ran it down, and then I took a long up. I traded it a few times. I just did the exact same thing you're trying to do right now. But I got the short though too. I took the short, ran it down, then I took the long when the signal printed. Got the BFI footprint. I took a long up and went for a long ride. So, and then I traded this range a few times back here in, what's this, March of this year? Yeah, March through somewhere over here. I stopped trading it. Yeah, maybe about time I started this Discord, actually, I stopped trading this. Yeah, somewhere in here, I stopped messing with it. Or I should have traded it one more time. Shit. I didn't think the structure was gonna break here, that's why I didn't bother with it. I was like, that's not gonna break that. So I was wrong on that one. Anyways, but yeah, wouldn't be surprised if it does the same thing. So what is this week's Microsoft? I don't know. I gave you the Microsoft on Friday. I think I gave you the Exxon the week before. I mean, I don't know. Let's see. I'll do my best. You know what? Actually, Qualcomm and AMD. Qualcomm and AMD may be the three. I got three for you. I got three. Qualcomm, AMD, Coin. That's my three for the week. Qualcomm, AMD, Coin. That's the ones I'm interested in. AMD, Qualcomm. I'm bullish on AMD. I'm bullish. Yeah, I'm bullish across the board. Yeah. Yeah, I hate that I'm a little biased with that. Even though we short it too, we short it all the time. I'm a little biased with the bull side on the AMD. Qualcomm is a great company, man. They don't. I expect them to be. Yeah, I'm sure the market does too. Yeah, I see they've been trading up as well. I think Qualcomm will be. I'd be surprised if they miss. They run a different model business wise than AMD. Yeah. Yeah, I can. Yeah. Yeah, I mean, I have to redo it. I haven't traded Qualcomm for a little bit. I've been trading. Actually, the last few times I traded this with Yoga Jesus. We took a ride here on Qualcomm to the short side. We traded this a few times, but yeah, I'll just have to draw it real quick. Nothing crazy. But even without looking at liquidity, I can already see it. I'm just giving you some rough lines here right now if I wanted to get more detailed, but this is basically the range that you're playing with here. Yeah, that's about right. I don't like that. That'd be your breakout level right there, about 128.08. That'd be your breakout to the upside. This is our current. Let me take a look at the liquidity here. 1 second. $125.36. Oh no, that's on 90-day. 30. All right, 118.64. So 118. So that's our monthly, and then our quarterly. BFI likes to exchange at the 125 level, about 125 to 127. Over 127 goes for a run. So 125.36. $125.36 to roughly 127.25. Say about there. Oh, which obviously corresponds with our lines here, our supply lines. So yeah, over 127 over this last one here. She goes for a run. Change this up to dotted. Like that, yeah, about over 127. So pretty much, yeah, this will be the last line right here. Over this level, she goes for a big run. Yep. Yeah, should have no problem. This is invalid. Let me take this off. This is irrelevant at this point. Yeah, beyond 127.35, you may see a little pause roughly at about the 134 level. Let me see, 134. You may see a little bit of a pause there at the 134 level. I'm just looking at liquidity right now, but yeah, you could easily see about 140, 141. So yeah, you're about right there, Corey. It's about, looking at about here for the next level of potential rejection before you get to the edge of that liquidity there. So yeah, so we don't even need this one. Just keep that like that. Say that's about valid. Right there. Just share that with you guys so you have it too. If you want to put those lines up on your own chart. Yeah, 130. Is that what is that what the AI is picking up, Corey? Those levels? Yeah, okay. Yeah, so that corresponds just about perfectly with with the way that I'm reading it. Yeah. I'm glad that I like it when I'm mapping my setup and the artificial intelligence basically has a similar setup. So that's good. It's just another layer of confirmation, so that's good. Yeah. So check the zones around 120. Sorry, yeah. So this is what I'd be looking for here on Qualcomm for the week. Most likely going to strangle Qualcomm for AMD earnings and sympathy. Some of you may have seen that in the general chat. I was talking to Arju about it. He was asking me why I chose Qualcomm, and that's why, because they have earnings the next day. So you'll get the IV move and the Delta move. So yeah, but those would be the levels that I'm looking for here. At this point, it's already pushed beyond this. You see how it's struggling to get beyond this point of control here, though? See how it's been having a hard time going beyond that. Just kind of struggling here. So most likely you get the break over the 120 level. Should put a line there. Most likely get this sharp break, hold, close over 120. That make me bullish again. So I'd say that's a good look right there. Yeah, we got the move here on this. Is this? No, this isn't open yet. Wonder if that has any. Yeah, not yet. Yeah, looks like they're buying that up. That's good. It's quite a bit of money. 42 mil, 115. He's buying it here at the demand. He took the money move right there, 114.9, pulling out of the demand side. Yeah. So it looks like BFI is taking their position. So yeah, it lines up with what we're seeing on the chart in terms of dark pool flow. So yeah, I think this is a good move. If it retraced back to this demand zone, I would gladly buy a call here, no problem. Yeah, anywhere in this demand zone, we get a signal. Again, here we go again. Bullish pair, hammer with with elevated volume, followed with another bullish candle, bullish engulfing, doji bullish, etc. So yeah, I'd be biased. I'd be biased to the call side here. I most likely wouldn't short at any range here in this. From just knowing where the BFI has the position, I wouldn't short from here. I would be bullish bias from this stage. But yeah, I intend to trade Qualcomm this week for sure. I like this ticker. I like this company. It's a good company. It's strong. You guys got anything else for me? Questions for the week or anything you want to hit me with? I'm going for about an hour and a half now. Curious if any of you guys took me up on this little homework assignment. Wondering if anyone developed any trade plans. FedEx, okay, nice. Good work. Okay. Yeah, I would like it. You guys should do it honestly as an exercise. So that's actually something that I'm working on before I deliver the course to you guys. I'm working on exercises, things that I do, and start implementing that with you guys as an exercise to build up your trading. Try to give you some weekly exercises and little homework to, I can give you a million calls obviously all the time, but the more important is that you learn how to do it for yourself. Baba, stop crying. You're okay. You're fine. You're fine. That boy hungry. Old fat head boy. We're gonna have to trade a few SPX contracts for you this week. Yeah, post it in the general chat. Yeah, that'd be great. Yeah. Yeah, it's a combination of both, but yeah, obviously I want to teach you how to fish, right? Yeah. I mean, I definitely throw plenty. I feel like I throw plenty of fish in there, but yeah, teaching you how to get your own in the same way, key, right? But of course, obviously, I want you to make money. I want you to not only make money while you learn, but also it's important for you guys to see how I make the decisions, right? Like, yeah, I can give you a basic outline, right? I can give you a system to work with, which is profitable, right? But also, I'm give you my subjective trades too, so you can see, he made the decision like that based on this, or he made the decision to exit based on that, right? Because the market is dynamic, right? It's not static. So no trade is ever the same. It's a dynamic environment. So, but yeah. So I think Coin, AMD, and Qualcomm though, those are the ones that's my picks for the week. I already have my trade plan set up for these guys, and I'll put that in trade swing ideas. So after I eat, I'm about to eat something. But those are my picks for the week. Those are my 3. But yeah, get ready to call this. I'm gonna go get something to eat. Get some studying in. Get rolling. Papa, stop. My boy's hungry too. Yeah, good session. Yeah, I'll upload this. Some good information in this one. You guys had really good questions. Papa, stop. Stop with this comb. Yeah, for sure. Okay, guys. All right, have a good night. It's good talking. Stop. Jesus Christ. I'll catch you guys later. Take it easy. Okay. All right. Okay. All right.